you do not have to worry about any market crash. You know why? Because the market will crash. Everyone is like, the market is gonna crash, the market is crashing, the market is crashing. So here at Ken's Money Matters, remember, we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income, basically financial freedom. So today we're talking about market crash. And there has been lots and lots of information about the upcoming market crash. Some people are predicting last month in September. Some people are now predicting this coming month. People like Robert Kiyosaki are predicting a market crash this coming month, basically October, this month we are in actually. So there are different people, different news outlets, different, financial analysts and stuff and gurus and whatever talking about market crash. Yeah. So we as investors, what do we do? Because in this channel, we are investors. We're talking about, building wealth, not keeping your money in the bank, not keeping your money on the sidelines, building wealth consistently, putting that money in the market, letting that money work for you. There's no way that money can work for you if it's in the bank. The money can only work for you in the market, for example, in real estate, for example, in a business, for example, in bonds, for example, in money market funds, for example, in bills, So there are many places that the money can be working for you, not in a bank account lying on the sidelines because of market crash. So it's good to address such issues so that people who are watching my channel know what to expect and what to do. You do not have to worry about any market crash. You know why? Because the market will crash. I know that's not what you expected. Anyway, guys, there has been a lot of information about the coming market crash. So I have a lot of my clients coming to me asking me, hey, what's up, man? I just started investing. What should I do? Should I pull out of the market? I'm doing this video to inform you of what to expect, what you should do due to a market crash or when a market crash is due, and what you should do with such news. So number one, let's mention a market crash is a normal occurrence. The market has crashed several times. So historically, the market has crashed. It will not crash forever. It will always come back up. And that should be the focus of every single person. So how do you deal with such news? And how do you go about investing if you always have these people like CNBC screaming about market crash? How do you deal with it? Because market crash will affect every single person. If you're an investor, it will affect you. So number one is avoid the news. You should avoid the news. Avoid everyday news if you are an investor. That's not where you should be looking into when you're investing. If you are a long-term, consistent investor, news has nothing in your place. You don't want to be looking at news every single day if you have an investing horizon of almost 20 years. Why do you want to care about what CNBC is saying? Why do you want to care about a pullback of 10%, 20%? It doesn't matter. It will definitely affect your net worth, but it shouldn't be an issue in your investment journey. Number two, avoid fear. If you are an investor, one thing that you should not let control you is fear. You will have fear. I'm not saying you shouldn't have fear. You should have fear for sure. Fear is normal emotion. All of us do have it, but do not let that fear control you. I train people when they're trading Forex that you have emotions and you don't have to control those emotions. Don't focus on blocking the emotions. Just focus on not letting those emotions take over your decision-making process. Just have them, but don't let them interfere with what you're doing. So do not let fear control your decision-making process when it comes to investing. If you are a long-term investor, you know that over the years and over the horizon and historically speaking, the market has crashed many times before. It has always come back up. In March last year, the market went down almost 10%. It was back in less than a month or so. Right now, people have reaped so much return from the market. In September, the market pulled back almost 5%. It's going to come back at some point. I don't know when, but it will come back. For as far as we can go with data and statistics, the market has always gone up. It's a clear trajectory, as you can see. It's very clear. It's nothing you should always worry about, nothing to doubt about. Don't worry about the normal pullbacks. The market cannot move like a straight line. It always has zigzags because there are factors that affect the markets. The market has to obey certain factors and certain conditions for it to become the market that we know. If there's no hand that controls the market is self-controlling. We should believe that the markets are sufficient and efficient if you read economics. So we should also believe that the markets will always self-control. So when the markets are pulling back, they will at some point go back up. So don't let fear make decisions for you. Most people who have always pulled their money off the market have lost the money, because you can only confirm that loss when you pull out your money. Number 2, long-term mindset. Have a clear long-term plan. Do not invest for the short term. If you're investing for the short term, or if you're a trader, that's a completely different thing. And I always say trading is not investing. Trading is basically a side hustle whereby you're trying to get some more money that you can invest. But you must have a long-term investment plan, which is something I discuss when you come for finance coaching. Very clearly, we talk about it and we determine what is your long-term investment plan. So have a long-term mindset. Then you won't have to worry about short-term pullbacks of the market. You won't have to worry about what is happening tomorrow, what's happening next month. You have a long-term horizon. You have a long-term sight. You have a long-term plan. Okay? So thinking long-term and having that long-term plan, long-term mindset, long-term goal will surely make you wealthy, because it's not a matter of if, but when you become wealthy. So yes, long-term mindset is another thing. Number 3, always train your mind to know that when the market crashes, then it means prices are low and you can buy more. If you think of it that way, you don't have to fear so much about what is going to happen. So most of the time when the market comes down, I'm thinking, okay, this is time to buy more, because now I can find my ETFs are much cheaper. The mutual funds are much cheaper. The stocks are much cheaper. The indices are much cheaper. So that is the best time for you to buy more. So if you're someone who is still building wealth, you haven't reached your goals yet, or you haven't reached the end yet, which nobody does, this is the best time for you to get rich. People get rich when the market crashes. That's the best time to make money. That's the best time to build wealth. That's the best time to start the journey. But don't pull out your money and hope to catch the bottom, because you won't know what the bottom is. When it retraces and people are screaming, people are crying, that's the time to buy. Warren Buffett says, when everyone is fearful, that's when you should be buying. And you should be very fearful when everyone is greedy. So when everyone is greedy, be fearful. When everyone is fearful, be greedy. And they also say, buy when blood is on the streets. What they mean is just everything is going wrong. Everyone is leaving the market, even if that blood is your own blood. So always train your mindset to think of the market in terms of, it's on sale. It's time for me to buy. It's time for me to add to my portfolio. Because you know what? It will come back. The market will always get back to its glory and position. So you can never time the market. And that takes me to my other point, number 5, is that don't time the market. If you are a long-term investor with a plan and you are a regular investor, continue doing what you do. Continue putting your money. Continue living below your means, making more money, investing the money. Simple plan. So continue investing regularly. It's been statistically proven that even if you were to time the market so perfectly, let's say we have 2 long-term investors, and one of them invests regularly. Every single month, they put some money into the market and they let the money work for them. While the other person always have a lump sum saved up somewhere in a bank, probably safely, waiting for the crash so they can buy these things on sale. First of all, you can never time the market perfectly every single time. So let's just forget about that. But we're going to assume in this case, in this particular scenario, that you have always timed the market perfectly. So historically speaking, and using the data, if you have timed the market perfectly, that every time it came down, you bought lump sum, you don't even beat, or if you do, with very few coins, the person who just invests consistently, whether the market is down or high or wherever. That is the investor you want to be. If you're not a financial expert, if you don't care about the happenings in the market, you just want to be wealthy, invest routinely, regularly, and always stay that course despite what is happening. And that's what I do. When it crashes, I can add more. So we assumed 2 scenarios here. One person is perfectly timing the market, which is very difficult. And I've mentioned that it's extremely difficult to time the market. So one person has perfectly timed the market for over 20 years, for example. The other person just does it regularly and doesn't care what prices are there in the market. What they follow is their own timeline to investing. These 2 people, most likely the person who does regular investments will make it. Always remember, when you buy stocks, you haven't lost money really until you sell those shares at a loss and cash in. So you always have to remember that. You have only lost if you cash in. And that means when the stocks rebound, you are in a much better place. So don't think of it in terms of I've lost money. No, you haven't lost money. The market has retraced. The market has taken a breather. The market has pulled back. If I own 200 shares of Apple, I will still own the same 200 shares of Apple, and at some point it will come back. Simple, easy. Think of it that way. That's how you train your mindset. I'm teaching you to train your mindset to deal with market crash. And then you must also remember that there are so many people out there who benefit from such news. There are so many institutions out there that will benefit from such news. And that would mean that if you play to their tune, they will always be playing this game with you. And that keeps you from investing. So each time they will be talking about a market crash that's coming. So if you're someone who's fearful, who want to stay on the sideline, you will always be on the sideline because there are people who want to make money off that money you're not investing. There are people who want that money that you have put in the market. Never think that these people are just sitting there to tell you about the market. No, they're not telling it to you because of your benefit. They're telling it to you because of their own benefit. So never worry about what people are saying about the market. Just trust that the market has always done well and it will always do well. The other thing is, if you're well diversified, you have to be well diversified. You have to have a good asset allocation. So again, if the market is going to crash in the US, for example, the US market, for example, you want to have some international stocks because not the whole world will crash. No, not at the same time at least. So you should always have, you have the US economy in your portfolio. You have international stocks in your portfolio. You have some emerging markets stocks in your portfolio. Usually most people, when they have the US stocks, they have international stocks, they have emerging markets and some bonds, for example. So it depends on how well are you diversified. If you are well diversified, you have good asset allocation, then why do you have to worry about market crash and stuff like that? Because remember, when the stock market is crashing, inversely, the bonds could be doing well or other commodities will be doing well. So if you are well diversified, then you don't have to worry about that because when that comes down, there's something else going up. Or if it comes down, it won't hit you as bad anyways because your portfolio is properly diversified. So there are many ways you can deal with the market crash. And please, the main thing about this is long-term investing, consistency, and staying the course despite what is happening, despite what the news is saying. Don't listen to people. Don't listen to every single person's opinion on what is happening in the market. What you need to do is invest. Don't wait for a perfect time. So yeah, basically I was just doing this video to talk about the stock market crash that everyone has been talking about. Everyone is saying it, everyone is predicting it, and I'm just telling you that's just a lot of BS. All you need to do, stay the course, invest your money, and you will build wealth. There's no two way about it. There's no secret. It's simple, it's easy, it's straightforward. And remember, if you want finance coaching, I'm available at any time. Hit me up. You will have a wonderful time. Talk to someone who has done it. Trust me, it's life-changing. It changes your mindset. It makes you think of money differently, and it makes you stay the course when you're investing and building wealth. Otherwise, guys, I hope this makes sense. If it does, give me a like, and share. And even if it doesn't, like again. Anyway, guys, thank you so much. We'll see you in our next video.
First rush when the school is out, when the booze is up.